Hey everybody, Mike Johnson with the Success Estate podcast. Thank you so much for taking the time to check out this video. I think we got a great show for you today. Well, I say I'm looking around. I know in all my other podcasts, I've had a special guest, but today it's just me. I hope you enjoy it the same way you've been enjoying other podcast episodes. I think you will enjoy this one. It's probably going to be a little bit shorter than those in the past. It's not going to have as much filler with great stories and things like that. I still believe that East Texas is interesting, but my first job is being a real estate agent, and I want to bring some information to you about the current market and put on wax some of my thoughts about current trends and things like that. So with no further ado, I'd like to start off. For one, I hope that you are feeling better than I am. Y'all, the pollen, it's been warm. Pollen has been dropping. My eyes are just all messed up right now, itching like crazy. I've been having to pop back out the Claritin. Thank you, Claritin, for helping me to manage through the season. I get really bad allergies. I hope you're not having the same issues I am. And if you do, go ahead and drop in the comment section what you use to combat your allergies. We got a chance to go out to the lake yesterday, and as much as I love it, I was miserable. I had to end up wearing my wife's shades in order just to keep my eyes open during our whole experience. But nonetheless, grateful for the warm weather here in East Texas. I think some rain is coming back, but let's enjoy these blue skies while we can. Speaking of the weather, things are changing here in the United States, period, but also here in East Texas. And the question, that comes up a lot is if the market is crashing. I've heard this from a lot of people that I listen to. I like to listen to things like the Patrick Bet-David podcast, and I've been hearing him say for months, and you've probably heard me talk about it on different episodes. I've been hearing him say for months, yeah, the market's crashing. He'll bring in guests, and they'll all say the market is going to crash. It's going to crash. It's going to crash. Grant Cardone, other people have said things like this as well, and they're smarter than me. As investors, they're probably smarter than me to a degree. They probably are able to spend more time looking at different trends. Maybe they got people researching for them, be able to bring up information that would be pertinent to be able to make that estimation. But I don't tend to lean to that. Because a lot of people, the comparison, of course, is with 2008. And if you didn't know, in 2008, the market crashed primarily because the housing market bubble burst. There were a lot of what are called subprime loans and things out there. And when people started losing their jobs, they couldn't figure out how to, of course, pay those mortgages. And all those mortgages started going into foreclosure. All those homes started going into foreclosure, caused a huge mess. Prices tanked, and that had a ripple effect throughout our economy. We're not necessarily dealing with that same thing right now. As a matter of fact, the unemployment rate is still pretty good. There are a lot of hiring signs out right now. You drive up, and I know that's anecdotal, but you drive around in East Texas right now, there's hiring signs everywhere. Would that be enough to help people pay their mortgage? The jobs that are available? I don't know. It depends on every situation, but that gives me some confidence. Like, hey, people are working. Now I know that there have been layoffs, in other parts of the country, especially in California. And I've seen some of the larger tech firms having to lay people off. And that's all understandable, dealing with what we're dealing with right now. I think the factors that are involved in this are what seem to be making a big difference in the difference between now and 2008. I'll never forget 2008 because it was so funny. At 2007, I graduated, and I was actually 18 years old, and I didn't get my driver's license until I was 18. And it's like as soon as I got my driver's license and I got my first car, the gas prices flew through the roof. I mean, during that market crash, I never forget that. Right now, I mean, we're not seeing even in gas prices now. Eggs have been let me not skip ahead. Gas prices have been up, but they've also come down to something that's more normal for the past 2 or 3 years. The price of eggs, of course, has skyrocketed, but I don't think that there's anything related to the market necessarily. That's just one industry. Now there are prices on the rise. Grocery prices, period, are up. All of this, I believe, has to do with inflation, and that there is probably what I believe is having the most effect on the market, and not even the inflation itself. It's our um, combating of the inflation, and the inflation is not good. I have limited knowledge, in economics and things like that, but I do understand that inflation is not good, and we experienced a lot of it, of course, here in the housing market industry, because of course when COVID hit, I thought that everything was going to go away. I didn't think we would have many houses to sell. I didn't think we would have buyers on the market. Then the government steps in. This is a recurring theme. Our government steps in, drops those rates to historic lows, right? In order to keep the economy going, keep people moving, keep people buying. And I don't know that it was a good or bad move. I think we'll turn around and look at it here in a couple of years and find out. I do know that they had to do something, and they made a move. So I'm not going to be overly critical of them on that. Was it the best thing? Maybe not. We're going to find out. But it stirred people up. It stirred buyers up. Now, people couldn't move around, okay? So we were on lockdown, but the interest rates were low. So buyers were coming to the market saying, hey, I could do something that I hadn't been able to do ever, which is getting these interest rates super low and turn around and buy a house and have low payments on them. My amortization over those 30 years would be a less amount. I'd pay less for the house than other people would. And I thought I had a pretty good interest rate. I was like at the 3.75 when we bought our house 7 years ago now. People were down in the twos, the upper twos, which is phenomenal. So it's causing people to want to buy there in 2020, 2021. People are like, hey, I want to buy. Now the dollars that they have to spend expand, because what happens with low interest rates, that's saying, like, say you're approved for $100,000, right? And you get and that interest rate at that point is 3.5%. 4%. Let's just say 4%. Well, that monthly payment is going to be smaller. I'm sorry. If you were to buy a house, that same $100,000 house at 3.5%, that monthly payment is going to be smaller. So the lending industry will look at it and say, okay, you can afford more house because the monthly payment is smaller based on the interest rates. So people were able to get more. I sold more $300,000 homes than I had ever in this area, just simply because the interest rates were so low, allowing people to buy more house. So especially in 2019, 2020, at the end of 2019, going into 2020, March, through that summer, people were getting really low interest rates and able to buy more house, which was, it seemed like a great thing. I'm having a great time as an agent. The only thing that threw a wrinkle in everything, of course, is that we were locked down. So here we are, locked down. Sellers aren't moving because jobs are laying off. People aren't able to come into work. Nobody wants to move, so nobody wants to sell. Well, supply and demand comes into play. Basic economics. Here we are with a high demand because of interest rates. They're super high, through the roof. At the same time, we have low supply. I think I said it. Yeah, we have low supply because sellers are are pinned in the house. They're not just, it's not that they just don't want to move, they're pinned in the house. And then there's others that don't want to move because they don't want to take the health risk factors. Nobody knew what was going to happen with COVID. Everybody wanted to be still. Lots of people wanted to be still, not everybody. Lots of people wanted to be still. So here we go with low supply, high demand, and boom, we started selling houses $10,000-$15,000 over asking price pretty quickly. I was hearing in other areas, big cities, $50,000-$60,000 over asking price wasn't even enough to purchase homes. This is not even just for loans. These are people with cash that were doing the same thing because maybe they sold their house, got a whopping amount for their home, and they turn around and buy another one cash, and they could offer over the asking price. It inflated, right? So what happens? We're talking about the market's crashing now. I'm giving you a backstory so that we can look at what's happening now. In August of 2022, I believe, the fight against inflation really took on because Jerome Powell, our Fed chair, says, hey, there's going to be some pain as we try to fight this inflation. How do they fight inflation? By raising those interest rates back up. Okay, so that causes buyers to draw back. Now, first they're wondering, hey, am I going to be able to buy a house? Am I going to be able to buy it in lots of different markets? It's having a profound effect on what somebody can pay monthly. At the same time, we're starting to see people warm up again. They're thawing out from the COVID freeze. They're starting to sell a few more houses. They're finally listening to their neighbors saying, oh, man, we got so much money for our house. And then they want to take advantage of that as well. And the Fed is doing their best to keep things from getting out of control with inflation. So they're constantly raising the interest rates. And even though mortgage-backed securities are not mirrored to the interest rates, though the federal interest rates, they are affected by those interest rates. So interest rates are steadily climbing. So are those mortgage-backed securities. Those interest rates in the housing industry are going up as well, all the way up to 7-8%, which is a humongous difference in comparison to the low threes, the high twos that some people were able to receive just months earlier. Right, 2021, the beginning of 2021 was probably the hottest that the end of 2020, early 2021 was the hottest that it was. I'm sorry, the end of 2021, summer 2021, all the way to the beginning of January 2022 was probably the hottest that the market got. It was scorching. All right, so do I believe that the market is crashing? I don't believe that the market is crashing because what happens in the crash? Right, just any crash, you're not expecting it, more than likely. Even if you can see if somebody veers off the road and headed straight towards you, even if you can see it coming, you weren't expecting it, right? A crash is not something that most people do intentionally, unless a test dummy. We were not intending. We didn't want. You wouldn't necessarily want a crash. I think, and I'm still searching for a great term for it, but I just think that we are right now having to just put a halt on too much of a good thing. Okay, so we're just hitting the brakes. That's all that we're doing. We're hitting the brakes, and I'm listening to people. And what bothers me when I'm listening to people in the real estate industry, primarily investors with the loudest voice. And when they're talking about a crash, for one, I recognize that fear mentality, that the sky is falling, that gets people's attention and it sells, right? So these people, they're not only talking about their investments in order to, help you invest. They're also making money from eyes that are watching these videos, affiliations and things like that, or even bring it back to their own content that they can sell. I recognize, the business strategy behind it, but it also bothers me that these things are being framed the way that they are, because it's not as if the world is falling apart. Could it? in the future, could there be some serious implications? Yes. But even on like the Patrick Bet-David podcast show that I like on YouTube, I was listening to the same gentleman, these two same gentlemen that were saying, "Hey, everything's about to crash, and it's going up to 10%. Everything is happening." They're also turning around and reading and finding out, that hey, the market isn't in as bad as a shape as we thought it was going to be. Now, maybe the market will crash. I don't see that scenario. I don't understand how that scenario could happen. In my limited understanding, I don't understand how that could happen with all the things that we have in place right now. I could see buyers pull back, but the thing is, people still need a place to live. And people are always going to be buying houses. They're always going to be buying houses. Now it's just a matter of who's buying a house. And people are waiting to see, hey, I've had several. I probably could have I had a record year last year. I could have blew the top off if the people that wanted to buy the house either could have found the house in the time frame that they were approved to buy it. They were eager to purchase. It was just hard out here. It was so competitive. It was hard to buy a house. And many of them walked away and say, hey, we'll see what happens over the next couple of years. We'll see. Maybe next year I'll come back onto the market when hopefully there's less competition, and then also too these interest rates, do something different and I can afford the house again, those houses that I want again. So all those things, put together, I think are making the biggest difference in what we are seeing right now. And forgive me, I've got my computer today because I want to make sure that I'm giving as good of information as I can. The question bodes with hey, is the market crashing? Is what are people going to do moving forward? And I just think I don't know that this is the height of the interest rates. I do recognize that people still want to buy a house, and why is that? I think it's primarily because there's no cheap way there's almost no such thing as affordable living anymore. Like, hey, I found a great deal. Everything is going up. And so people are saying all these things about the market, telling you, what you should or shouldn't do. And I do have issues with those, and I wanted to put that all on record. But moving forward, whose market is it anyway now? So that's after all of the crash talk and everything that's going on with buyers fluctuating, coming in, going out. For a while, they had really drawn back. Mortgage applications were way down. Now they're picking back up and going back down again. It's going to be a roller coaster for a while as people try to figure out this new normal. And that new normal is going to play a role in what we just talked about. But whose market is it anyway? Well, right now, I think we're actually moving towards a more balanced market. Now, there's anything that is like below months of inventory matter when we're talking about whose market it is. And for a long time, y'all, that we've had 1 or 2 less than 2 months of inventory in our East Texas area. People, I'm primarily talking about Longview and the surrounding areas kind of follow suit, but primarily Longview area. We've been under 2 months for a while, for several years now. And when we're under 2 months of inventory, that's how many, with the current amount of houses we have on the market, how long should we have inventory with what we have currently right now? And it was less than 2 months, all of our houses would be gone if none others hit the market. With that, that below 3 is considered a seller's market. Why? Because the economics are on your side. There's low supply. The demand is going to be high. You're going to be able to get more for your home. Buyers don't have as much leverage negotiation because the buyers are competing with other buyers. And so, hey, if I'm trying to get a great deal, I'm probably going to lose out on the house because somebody else is going to say, hey, I don't need that great of a deal. I just want the house at the terms you requested or better. So as those months of inventory climb, which at the end of the last quarter, they were at like 2.1. The last quarter, um, excuse me, let me see here if I've got the December pulled up. I thought I had the December month pulled up. I'm going to do a little comparison here in just a little bit. But with those inventory months of inventory change, we're starting to creep back up, and that's giving negotiation power back to the buyers. Now, there's not enough homes out there to where the sellers are hit. There's not over 3 months is considered um, uh, neutral or balanced market. I believe over 6 months, five, maybe 4 to 6 months and above is considered a buyer's market because there's so many houses out available. They kind of got their pick of the litter. There's not as much competition. So we're in a balanced market. I think that this is a great time. Okay. I just think this is a great time. I appreciate the pressure that still comes along that, with buying and selling, competing with other people on all fronts. So the question then bodes, should I buy right now? And the answer that I give may not be one that you necessarily like, because I know people give these polarizing answers, but the answer is maybe. Maybe you should, maybe you shouldn't. Depends on what it is that your overall goal is. So I tell this story a lot. A couple of years ago, I met a gentleman that was trying to buy an investment property. Then he started looking at other properties, turned into want to buy a home. But overall, he was wanting to buy something in the middle of the pandemic. He was wanting to buy something that would that he could, rent out for a while, turn around and sell. He would live in for a while, rent it, and then turn around and sell after it appreciated. And I had to pump the brakes. I had to help him pump the brakes because what was happening at the time was that the prices were super high, and appreciation houses normally appreciate at about 2% every year for the standard house, and he was not going to see that. As a matter of fact, I was telling him, hey, this is like a perfect storm. You're not going to see these low interest rates and high prices, for long. It's just not sustainable. And I don't know a whole lot about a lot. I know a little bit about a little bit, and I could tell him that this was not going to be able to be sustained. And so he said to me, hey, I'm going to back off, and I didn't blame him because his goal was, hey, I'm going to do this 2 years and turn around and sell it. So, man, this is not the time. If you are thinking, hey, I'm going to live here for 5-10 years, I think it's a great time to buy a house. 5 years and up. I think you need to be living there at least 5 years. I know everything, nobody can control all parameters and all factors, of course, but if you can, I would try to live in a house at least 5 years, 5 to 10 years, because then, for one, you'll be able to get some equity out of the house after you've paid on the house for a while, and I think things will get back to normal and then gradually appreciate like they did in the past. So if you are looking to do that, I think it's a good idea. I think it's a great time to buy a house. If you are looking to buy something, turn around, and sell in a couple of years, I don't think it's time for you still. I still think that the prices are too high for you to come in and look to make money on something that quickly. Unless you buy, of course, if you can never find something that's underpriced for the market, maybe you got to put a little work into. I think it's always a good time for those because you can add value to the home if you're willing to go in and work on it. I would say don't be afraid. If you're looking to buy right now, don't be afraid. I know the interest rates are a little bit high, but you've got more leverage than you've had at any point in 3 years. I just had a buyer close. They were able to get the house $12,000 less than the asking price, and they got $5,000 worth of closing costs, home warranty. The only thing they didn't pick was the closing date, And so all of that together, you've got, I mean, that's something that we haven't had since 2019. It's a great opportunity for you to it's a great opportunity for you to come and get some of that leverage back. Also, too, here's what I'm saying to buyers. What I would do is buy in my monthly budget range now. Okay, buy it now because your interest rates are higher. That means your if you turn around in a couple years and these interest rates come back down to the fours, let's say you get at 6.5, almost 7% now. You come back in a couple years and it's 4%, 4.5, where it used to be. If you could refinance the home, now you've got a house that's way under your monthly budget. So now that's money that you can start saving every month, and a house that you have loved to call home, hopefully. So I think that actually works in your favor as well. Now, question on the flip side, should you sell now? And a lot of people are, they're talking about, again, some of these podcasts and some of the shows, I could tell that they're primarily investors and not necessarily, people that are buying and selling or talking to the average everyday homeowner like us, myself included. And one thing that I wanted to point out and show is if you're considering should you sell now, hey, the one of the biggest factors to take into consideration, as what's being thrown around is, prices are plummeting. They use scary terms. Okay, prices are plummeting. The market is crashing. All of this. The one thing that you should consider is, what are the average price? What are the average home sale prices now? Are they lower than they were? 2019 was a good year. 2018, it was better than 2018. I would then call into question, hey, where do we stand compared to pre-COVID? And let's look at a few things. If you look at, I'm going to compare the quarter 4 of 2018. Median price in Longview, single family home, new builds and existing, $164,000. $164,000. Most of those houses, 54% of those houses were between $100,000 and $199,000. Okay, that's quarter 4 of 2018. Now I'm comparing the end of the quarters because, of course, we haven't come out of quarter 1, and no reports are out there yet for 2023. But in 2019, quarter 4, $178,000. That's why I was saying 2019 was a little bit better. $178,000. Still, 56% of the homes that were sold, the price distribution were between $100,000 and $199,000. Only 26% were $200,000 to $299,000. So most of the houses were under $199,000. Now let's jump to where it is now. So we know 2020, 2021, 2022 record years. 2020, 2021 record years. Let's look at the end of 2022. At August, the interest rates went up. Buyers backed out. Let's see what happened. 2022 quarter 4 market statistics. The median price is $245,000 compared to $178,000 in 2019. We're still above the normal of 2019. The price distribution, 37% of the homes were between $200,000 and $299,000. Only 22% were between $100,000 and $199,000. Those were considered the affordable price ranges. People have changed. Okay, buyers have changed. Even myself as an agent, this is the new normal. You could kind of expect to pay somewhere over $200,000 for a great house right now, and that's even in our area. We're not even talking about Dallas Metroplex, Houston. We're not even talking about outside of Texas. This is actually considered an extremely affordable place, and the housing prices are way up. in comparison to where they were in 2019. If I can pull up, let me see if I can still pull up the January 2023. January 2023 statistics just came out. Median price $222,000. So compared to quarter four, you could clearly see that prices are still coming down, but they're still over $45,000 more than 2019. The median price. They're starting to even out. Houses are started at 31%, 200 to 299,000 in the price distribution. Now the price between 100 and 199,000, 28%. So we're seeing a big difference here. We're seeing a big difference in prices are coming down slowly, but that's exactly what the Fed wanted. That's the reason why they raise the rates, because they know people will continue to buy at these astronomical amounts, and we couldn't sustain that. I don't have a problem with the prices coming down some. Some people will say, oh man, well, the buyers before are underwater. That's the reason why I said, hey, you need to stay in the house for a while, because you're going to be gaining some equity in the home. At the same time, we need the as you're paying down the portion that you owe, we need those prices that dip down to 222,000 in comparison to 245. We need to slowly start catching back up. So those are going to meet after a while, and you're not going to be underwater anymore. It may take a few years. If you stay in there a few years, you're good, in my opinion. All of those things are pointing towards, I believe you should sell your house now if you want to sell it. For one, because now you can sell it, still get more than you would in the past, and also be able to turn around and get some and be able to negotiate your new purchase if you want to purchase. If you want to sit on it and rent is extremely high right now. But some sellers are losing money, like you're seeing price drops and things like that in the market. And when you hear people talk about that, why are people losing money? Why are the houses sitting on the market? It's because you're not. Unfortunately, you've been spoiled over the last 3 years, okay? You're looking at, oh, man, my neighbor got this. Well, your neighbor sold at a time that where the interest rates were low and buyers were flocking to the market. Right now it's coming down. So if you still want to get the most for your house, what you should do is pricing according to maybe the last 2 months. See what buyers are willing to pay over the last 2 months, and also be honest about your house. 2 years ago, you could put almost anything on the market. You saw the memes and everything of like a doll house, like 1 bedroom, 1 bath doll house, and they were selling it for $350,000. Something silly like that. Tiny homes, different memes. All that stuff was funny, extremely funny. But it's changing now. You're gonna have to adapt and change with it. So my suggestion is make sure that you are pricing according to what is comparable and competitive in the market where you are. Take a hard look at what is going on in your area, and try to get in a price range where people are normally paying, not the past 6 months, because that's going back into the time where the interest rates were low. Do the past 2 or 3 months. Stay there. Don't compare any other sales, especially the closer you can get to January, February of 2023, the better you will be able to really predict what a buyer would be willing to purchase. Because there are still houses. Now, if your house is updated and you price it competitively and it's in a sought after neighborhood, you're going to have competition. You're still going to get a great price for your home. Okay, you may not get $30,000 over. I'm sorry. The market kind of spoiled us. We're not going to be able to do that anymore for most houses. But for the good ones, I tell everybody, I think it was a Drake song from years ago, the good ones go. The good ones go if you wait too long. No, I'm just like, no, I don't sound like Drake at all, especially now being all nasally. So the question bodes, should you buy or sell at this time? And I think that the answer should be yes. Depending on your situation, I would definitely take time to talk to your real estate agent. If it's not me, give me a call though, because I really enjoy helping people with these decisions. To try to take in as many factors as you can and make a wise decision that will hopefully be good for you moving forward. What we do for sellers is what's called a comparative market analysis, and with buyers, what I tend to do is have people connect with their lenders to get the pre-approval, because there's a lot of factors that a lot of information that you can receive from your lender when you take the time to see if you get approved. A lot of gray area, a lot of gray and wondering and concern. I can handle those things with information. So a lot of times I ask, hey, can you participate by getting information? Go through with at least one pre-approval. Let's see where you stand, see how you look to a lender, and then we can make a plan from there. I can make you a map either way, whether you buy or sell, as long as you get that pre-approval or you get that comparative market analysis. We can see what's going on and see what's best for you. And right now, y'all, we're lastly, my last segment here. A lot of people are talking about we're turning into a renters nation, and the statistics starting to look like it. We're moving towards being more renters than owners. A lot of people want the mobility, the freedom, and I'm going to raise the alarm, the caution flag right now, because to me that's pretty scary. I love the options to be able to move in and out of contracts and things like that when it comes to like my cell phone and everything. But at the same time, this is not a cell phone contract. This has the ability to affect things down the line for years. I hear people again like Grant Cardone, someone I know I'm naming some of the loudest voices, but I've listened to him, snippets of him without context. Maybe I need more context, but he was saying things like, don't buy a house. Houses were built for the banks. The banks came in and said, how can we make money? Oh, well, we'll build houses and lend to people. Now, I mean, banks do want to make money, but people have needed housing for years. We always needed a place to stay. Shelter is an essential for life. People were just building them their own selves when they first got here. We didn't have things like construction companies that would be able to help build a city and invigorate an economy with loans and things that would help with that. Now, the term mortgage does mean things like death note, but 30-year mortgage, if you're a younger person especially, that may not be a note that you take with you to your death. If you're up in age, you're more seasoned. Could that have some ramifications for you? Yes, if you don't pay it off early. Either way, if we turn into a renters nation, who's owning the houses that we're renting? To me, that's the biggest flag. Somebody's going to own these places that we're renting. Now, you look at people like Grant Cardone. I've heard, Grant, if I'm wrong, you could correct me. I've heard that his company owns the place that he rents from. So he's still owning the places, and it may be a small detail that matters. It may matter, but either way, you still have some ownership, right? There may be some tax benefits and things, but you still have ownership. I don't think that the average person has the either the desire, maybe the capacity, maybe the ability to be the type of investor that is going around buying houses for other people to rent out of. Either way, if I can do anything for my family, for my lineage, for my legacy, I think that it's important for people to buy a house. If you don't plan on going anywhere, I'm gonna do basic investing, to try to shore up my retirement and things like that. Buy a house. That structure, if you maintain it well, can be passed down to your family for generations, right? Land that can be passed down for generations. I would say go get your piece of America. Go get your piece of America. If you're not going to go and invest and do other things, buy duplexes and things like that for people to live out, go get your piece of America. Because what happened a lot during this pandemic? Hedge funds were buying houses, banks were buying houses. Why were they doing that? Because instead of saying, hey, I'm going to have this mortgage for 30 years, if they pay it off early, I don't make as much money as was originally on the amortization schedule. That's a risk for me in two ways. Why not just buy the building, turn around, rent it out? Because people are going to have a place to live. Rental rates are on the increase. They're on the rise. That's why there's no cheap way to find a place to live, unfortunately. Rental rates are on the rise. Why wouldn't I just turn around, buy the house? Now, past 30 years, people are going to be renting from me. And the crazy thing is, they're not going to turn around and sell those homes to everyday buyers. Other hedge funds are going to come in and purchase them after I've shown, hey, look how much money I'm making off of this house every month. Now the house is completely paid off. I come in and get a new loan as a hedge fund, get it paid off quickly as well. Now I'm making fistful of cash on all these houses that I own. And at the end of the day, as a renter, I don't have anything against renting. I actually think that renting is good depending on what you have planned for your life. If you need mobility, rent. But if you're going to be in one place, hey, I just don't want to maintain the house. I wanted somebody else to take care of it. Well, also, too, I hope at the same time you are putting away tons of cash, right? The dollar is becoming less and less valuable. I hope you're putting away tons of cash for your family. You know, I'll be you purchase something. I don't know if there's anything as valuable as real estate, land, or homes. I hope you're buying something that is as of extreme value, that's going to appreciate over time, and you'll be able to pass down to your children. My whole thing, if I can buy at least one house for every last one of my children, whenever I get old, I pass away, you know, hopefully I get a chance to live a long time, Lord willing, me and Alicia get a chance to live to the ripe old age of 120. Yeah, I'm able to see my kids. I hope that I've been able to purchase things that will relieve them whenever it's their time to grow up and have responsibilities. If they so choose, either they could come in and live rent-free. Hopefully my grandkids will be able to come in and live rent-free, or they can turn around and sell it and use it toward purchasing something else or starting a business to have some capital and things like that. My friend Roberto Monsavias over at Bancorp South, one of my trusted lenders here in Longview, great, excellent lender who takes care of his people. I would also say, hey, listen, he said something on an interview I did with him a while back, several years ago. Purchasing a house is like a forced savings, right? So saving, for one, you're saving a whole structure, and also, two, you're gaining equity in the home. That's your ownership stake of the house. You're gaining that. Most people don't have $100,000, $200,000 sitting around and they can go and purchase something. And then, so you go in with a lending partner. Now their portion, they probably have the most equity. Their portion is coming down while yours is increasing. Eventually, you're going to pay that thing off, and you don't owe anybody anything except taxes, which everybody is going to pay. You know, now the tax implications are why people are, you know, maybe saying go a certain route of purchasing through your company and renting from it. You know, I understand all those things, but if you're not going through all those hoops, buy a house, pay it off, take that house on through to the next generation, to your kids and your kids' kids. Hopefully, you'll also be training them how to maintain, what to do with the home. You're getting a will together, you're living trust, whatever route you may be taking, so that things can be taken care of, and you're able to take care of generations to come, especially amongst black people. Unfortunately, we weren't given our 40 acres and a mule, right? Were we deserving of that? I believe so. You know, I don't have a problem with reparations. If we get it, great. If we don't, great. The next order of business is, how do we position ourselves as black people? Because, of course, if y'all can't tell by the screen, if you can't hear my voice, I'm a black man. I have black children. And I want them to experience all that America has to offer. Money isn't everything, but it's great if you can get it. Okay? So to be able to pass down some generational wealth, I may not be able to experience all of it. That's the big thing. I won't get a chance to experience all of it. Okay? I'm going to have to set up my children for it. Don't be selfish. Delay some of the gratitude. You're going to look back. You're going to look back in years to come and say, man, I've set my family up for success. Okay? I set my family up for success. It may have taken planting seeds, watering them, making sure they grow healthily. But those seeds, they multiply with the next batch of fruit. Okay? They multiply. You get look at all those seeds that come out of an apple. You know, think about what you can do with one strawberry. Get you a topsy-turvy and see what you can do. All the strawberries that come from the one seed. Start with one seed and move on from there. Y'all, thank you so much for checking out this video. I hope you found it informative, educational, entertaining a little bit as well. I know I took a little bit different path this time, but I hope you found it great. Would you please share it, like it, subscribe on YouTube or Spotify, wherever you're listening to this podcast or watching this. I would greatly appreciate it. It means a world of difference to the algorithm. It starts telling people, hey, y'all need to come listen to this. It's like you turn around and say, hey, this is pretty good. Come check this out. So the algorithm will start putting it in other people's faces, and we'll be able to grow this channel and get more great information. You're going to receive honesty from me at all. If I sell something or not, I hope you win. All right. Thank you so much for your time, for your attention. Be blessed and have a wonderful day.